I'm speaking with Randall Jenica from Rowe Price about his favourite companies within some three quite distinct categories of gaming, healthcare and construction materials.
So three companies that we like, and really for very different reasons, James Hardie, Star Entertainment Group and ResMed. And if you think about what's going on in each of those companies, really we expect to see that their fundamentals are going to improve. So we expect that the returns are going to improve and the earnings growth is also going to continue to improve. The reason why we like James Hardie is that James Hardie is very well positioned in the US housing market. So James Hardie provides fibre cement cladding to new construction builds and rebuild homes within the US. It's a product that's winning market share, and James Hardie has greater than 90% market share. US housing actually has been in a pretty difficult position now since the GFC, but is on the recovery path. And so we expect as the US housing market continues to recover and James Hardie takes market share, that the company is very well positioned to deliver strong operational performance and strong earnings growth going forward. Star Entertainment Group owns casinos in Sydney and in Queensland. And if you think about what's going on with Star, they've invested a lot of capital back into their business to improve the quality of their product. And we expect that that's going to bear fruit into 2018 and 2019. So a better product, we expect will generate better foot traffic, more people being prepared to spend, not just in terms of their gaming operations, but their broader entertainment offering. And we're starting to see those strong numbers come through. And also we think that Star also plays well into an ongoing tourism theme, particularly from Asia and China in particular. So ResMed is one of the really successful Australian healthcare stories over the last couple of decades. So ResMed has a really strong position treating sleep apnea around the world. Right now they're in the midst of rolling out a really strong new mask cycle, and it's really innovation which drives growth in this part of the marketplace. So they've launched 2 or 3 new masks that are really ramping up in terms of getting market penetration and market acceptance. And this is on the back of a really successful ventilator or a unit sale that really is connected to the mask. And they've been rolling the ventilators out for the last 3 or 4 years and got a dominant position in that part of the marketplace. So they're capitalising on that strong base unit ventilator sales business with now a strong mask rollout as well. And one of the benefits of obviously companies like ResMed is that they seek to bring down overall healthcare costs. So they're more protected from some of the inflationary healthcare issues that you're seeing and how governments are trying to manage those around the world.
Now, Randall, can I just pick up on one of the points there that you make about ResMed, which is a healthcare company? And in terms of valuations, how accessible is this company at a reasonable price?
I mean, clearly valuations for healthcare stocks have increased over the last 2 or 3 years. So you've seen that the average P multiple, if you want to think about valuations through that lens, it's increased from roughly 23 to 24 times to close to 27 to 28 times. But that's reflecting the fact that fundamentals for the healthcare stocks have been stronger than expected. And the way that we think about the sector really is on a longer term basis. And where I think a lot of people make a mistake with healthcare is to be a little bit too focused on the shorter term or the near term multiple and miss the longer term dynamics in terms of what is really going on. Because these companies have got structural growth for many, many years to come. So when we think about the valuation in a longer term context, whilst valuations have moved higher, we don't think that they are particularly stretched at this point.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.